Okay, so liquidity is simply stop loss orders, and you'll find liquidity at major highs and major lows on any time frame that you trade. But the higher the time frame, the more important the liquidity is. Now, this is what's super important about liquidity. Liquidity is only there to give you the direction of the market. That's the only reason we care about liquidity. It's not an entry pattern, it's not a technique, it's just a tool, right? A concept to help you predict where price is going to go. Because let me tell you this, after 5 years of trading, once you got the direction right, you are 90% of the way there.
And for daily buys, there's three things we need, right? Liquidity, number one, right? You ask yourself, where's the most obvious liquidity pool? Where are the most obvious stop loss orders? Number two, you look at order blocks. Are bullish order blocks being respected? Are bearish order blocks being respected? Yes or no? And then you look at fair value gap, right? Are they being respected, or is price just going straight through them? Right? And then once you've got all those, the daily bias, the direction of the market is very simple, very easy to predict. The absolute crucial thing with ICT trading is that regardless of the time frame you're trading, even the 1 minute chart, you always trade with a higher time frame direction, because that's the highest probability in trading. And trust me, from years of experience, that's absolutely true. Right? If you just trade in the direction of the higher time frame, you will save so much money, you'll have much higher win rate, and you'll become profitable. You will become profitable. Well, now, why do we care about the higher time frame? The higher time frame move the market. Those who have billions, so smart money, big banks, hedge funds, insurance companies, they only trade on the daily and the 4-hour chart, right? But this is the key chart that all of smart money, everyone with billions are looking at. But we want to ride, essentially, we want to follow the trend that smart money, these big institutions are doing. Right? That's what we want to do. So what we do know is that at key highs and key lows, smart money will move price there so they can get into that position, right? That's what we know, right? So that's the only reason why these markets move. The only thing we use for liquidity, right? This is all we need to do for liquidity, is we just need to target it, right? We get on the higher time frame, we find the obvious, like the next obvious liquidity pool, and we just target it. We use it to give us our direction for the market. That's it. It's that simple. We don't need to do anything crazy about liquidity. But assuming you're bullish and you've got the higher time frame direction, the higher time frame bias, whatever you want to call it, what we want to look for is suppose price comes up, price moves down, retraces down. Lots of people are going to put their stop loss orders here, thinking it's safe, and then they're going to buy any sort of dip. Right, price comes down, it just takes out their stop loss orders here, and it quickly moves off like that, right, in the opposite direction, and then it retraces, allowing smart money traders, those in the know, start entering around here, right, at a fair value gap, order block, and optimal trade entry. Anywhere around here is where all those traders in the know who are waiting for this liquidity sweep, for this fake stop room, they're all entering around here. They're buying, and then price massively moves up. Great to take profit, right? That is what a liquidity sweep is when you're bullish, right? And this must have happened to you so many times. It happened to me all the time. I get the direction of the market, right? But I just couldn't make money. And I couldn't make money because I'd have my stop loss here, price would come down, it would take out my stop loss and then quickly go to my fake profit. And if you've been trading for a while, that must have happened to you so many times. And it's the most frustrating and annoyingest thing in trading. And the reason it is because you haven't waited for a liquidity sweep. Right, so we have to wait for a liquidity sweep, and if we don't wait for a liquidity sweep, you're going to be the one getting swept. Once you've got this, like this whole framework of liquidity on the higher time frame, that gives you your direction. Liquidity sweep on the lower time frame, price has moved in the higher time frame direction. Any entry pattern after that, any entry pattern on the retracement will do. Let me just say something. The entry pattern is the least important thing, and this took me a few years to realize. Once you've got the higher time frame direction, like any short in the higher time frame direction or any trade in the higher time frame direction is high probability. Right, it's that simple. The whole point of waiting for a liquidity sweep is that we can put our stop loss order, or at least our stop loss, in the safest place possible. Very safe, because very unlikely, if this was really a fake move designed to take out stop loss orders, that price will come all the way up here, come all the way down again, just to take out more stop loss orders, and then move off. Very, very unlikely that's going to happen, right? But that's why we always put our stop loss orders right at the low of the liquidity sweep.
So it doesn't matter how much you know about liquidity, daily bias, ICT. If you can't fix your subconscious mind, you're never going to make money. And this is what happened to me. Within 2 years of trading, I had mastered technical analysis. I knew everything about liquidity. I could predict price on almost any asset, and I couldn't make money. I could not make money for 2 years. I understood trading, and for 2 extra years, I didn't make a single penny from trading. In fact, I lost so much money, and it was so just demoralizing and humiliating. I'm going to save you 4 years of pain, and there's one simple solution that you can do. And what you're going to do is you're going to write this down. You're going to write this down. I am so happy and grateful now that I am a profitable trader. And you're going to do that, and you're going to do that repeatedly over and over and over again, right? And this isn't some woo-woo BS that I've made up. This is exactly what I do on a day-to-day basis. In fact, what my notepad right here, I don't know if you can see that, right here, full A4 notepad of just writing the same thing over and over and over again.